Hello students, Assalamu alaikum. Today we are going to discuss paper 2022 of November 2023. We have done mashallah paper 12. So here is your paper. November 2023, paper 22, 7707. Okay. Now, first question. So buys and sells goods on credit. He has 3 credit customers and allows one of them, Nomi, trade discount of 10%. All customers pay SEO by bank transfer. Okay. The following balances were extracted from SEO sales ledger at 1st August 2023. It means the start of the year we have to collect from Nomi, Sienna, and Bhavana 450, 155, and 386, total $991. Okay. Now what happened? Uh, the following transaction took place in August. Okay. What is required? Sales journal. Okay. So 2023, we are going to make sales journal. 2023. Okay. 2023, August 1st. Sold goods to Nomi, list price 410. Only Nomi is allowed 10% discount every time. So here we'll write the name of supplier. Okay. The amount is 410, the list price, but we will charge him 10% discount of 410 multiply by 90%, 369. After deducting 10% discount, the total amount is 369. Okay. On August, sorry, that was August 3. I'm sorry. I thought it was August 1. Okay. Now, next. Sold goods on credit to Bhavana, $89. That is on 5th August. 5th August. She is not allowed a trade discount, so we'll write the amount directly. $89. Okay. Then Nomi return goods list price $20. That is going to be reported in sales return journal. And I think they have asked for sales return journal also. Yes, here it is. So this transaction will enter into 2023, August 10. Okay. And the amount was $20 list price. So again, because we are giving him discount, so $20 means we have to deduct 10%. So 20 multiplied by 90%. $18 would be reported over here. Because we are selling him on, not on list price, but with the trade discount of 10%. So every time we'll charge him 90%. Okay. Now, Nomi paid for $20 in full settlement of the amount she owed at 1st August. Okay. This is a purely transaction of cash book, not sales journal or sales return. Okay. Sold goods on credit, $180 to Bhavana. Again, it's a transaction of sales journal on 19. Oh. The name of Bhavana again and 180. $180. Then sold goods on credit to Nomi again. List price $230. Okay. 22, August 22. August 22. Name of the person, Nomi. And she 230. Again, we have to take 90% of the list price because we allow him 10% trade discount. So 230 multiplied by 90% means 207. Got it? Now, Bhavana return goods 19, so it's going to be reported in sales return journal. But the date was, what was the date? $27.90. 27. Dollar. Okay. Now, Bhavana paid 400. This is a transaction of cash book, nothing to do with sales journal and sales return journal. Okay. Now, we have prepared the sales journal. Okay. Total journal indicates the ledger account where the total will be posted. So, what we do on the last day, get the totals here. The last day of August must be 31st. August 31st. Okay. Transfer to sales account. Okay. How much? 207 plus 180 plus 89 plus 369. $845. $845. Okay. We have completed now. Now move to sales return journal. We don't have any more transaction. So what will we do? Get the total. The total would be 37. Here, we write August 31st. Transfer to sales return account. Transfer to sales returns. So that's 3 marks we have got, and here we got 4 marks. Okay, that's complete. Now, prepare the account for Nomi for August 22 as it would appear in the books of SEO. Balance account, break down the balance at 1st September 2023. So this is the sale ledger account, but only for one customer, that is Nomi. So what we do, okay, 2023, August 1st, balance BD. Okay. Balance BD was how much? Yeah, 450. This is the opening balance of loan. Okay. So that is going to be reported here. 400. Okay. Now again we have to go to the transaction. Okay. In our sales ledger, we have sold goods for 369. Okay, we won't get the amount of 410 in our ledger. Sales ledger will take only 369 for sales on August 3. Reason sales amount 369. Okay. Then okay. Here. Nomi returned goods on 10th August. 10th August, $18. 2023 August. That's 10. Sales returns. Again, Nomi paid us 423 of in full settlement of the amount she owed on 1st August. 423 she is paying. 400 out of this 450 she is paying. How much? That is on, she's paying on 11th August. So here we'll write the date 11. Bank. How much? $423. Okay. On the same date, because she's not paying, we'll write here sales discount. Sales discount. That is how much? 423 and 450. 423 minus 450. It means 27. We have allowed discount. Okay. Same date. Okay. Then again, we have sold goods on 22 to Nomi or 230, but the list price was 207 vintage. That is 22. Again, sales amount is 207. That's all. That's the transactions. So what we do on August 31st, we are going to calculate balance CD. That would be how much? So before that, we have to take the totals here. Okay. Now, totals 450 plus 369 plus 207. The total is 1026. 1026. Okay. Minus 18 sales return, minus 423 payment, minus 27 discount, 558 is balance sheet. 1026. Okay, what we have to do? Please, all my beloved students, don't forget to write balance BD over here. What normally students do, they leave the T account here. After calculating balance CD, they leave the account and they move forward. Don't do that. Always write balance BD. Whenever you are making any T account, remember to make this balance, sorry, BD, that is 558. Otherwise, you will lose 1 mark. Okay? This is of total 6 marks. That's all. The account is ready. Now, oh, prepare sale ledger control account for August 2023, balance the account and bring down the balance at 1st September 2023. So when you are making a T account, okay, control account, what we do, (2023) August 1, and we are going to report balance BD. Okay, what was the balance BD of the control account? From where should I get this balance? Yeah, 991. The total receivable at the start of the year would be the opening balance of control account, 991. Okay, now all other entries will appear on 31st December. All entries will appear on 31st December now. Okay, see, 31st December, we will report here all the sales from sale ledger control account, 845 total sales. $845. Done. 2023, August 31st. Okay. Sales returns. Okay. We'll get this amount of sales return from sales return journal, that is 37. Okay. 37. Then we have to take on the same date. Okay, we don't need to write date again. So what we do, we'll have to write all the payments we have received up till now. Okay, that was supposed to be taken from cash book. This total of discounts, sale discount, total of cash we collected. But because we do not have a cash book over here, so we have to search for that. How much we have collected. See, 423 we have collected from Nomi, plus Bhavana paid 400. That means 823 we have collected altogether this month. 823. Okay. Now we have to write sales discount. I think we have given sales discount to only one customer, that was Nomi, so she was given $27. Here we have to write sales discount, all collections. Anything else? Sorry. On 31st August, this is statement. I'm sorry. On 31st August, CEO decided to write off the amount owing by Sienna as irrecoverable debt. So this 155, this one, 155 receivable from Sierra is considered as irrecoverable, so we have to point to report. We have to report it in our control account, irrecoverable debt or bad debt. 155. Got it? Now, what we have to do? We have to calculate balance sheet. Now, before collecting balance CD, what we have to do? We have to write over here the totals. Okay, 991. Uh, 991 plus 845, 1000, 1000, 1836. Okay, minus 37 minus 823 minus 27 minus 155, 794. Okay. 794. It means here 1836. Please again don't forget to write the balance BD September 1st. Balance BD, that is 794. Otherwise you would lose 1 mark. Okay, next we got 7 marks. Now I have not left any place so where the examiner can deduct my marks. Okay. Oh, question number 2. Sarah owns a clothing factory. She sells the clothing to a small number of local shops. She allows 30 days credit. Okay. On 30th September 2023, Sarah's ledger account balance included the following: inventory on 1st October. This is the opening inventory of raw material, work in progress, finished goods. Purchase of raw material, now wages of machine operators, factory supervisor, delivery vehicle driver. Okay. Rates and insurance, general factory expenses, factory machine at cost, provision for depreciation of factory machine, trade receivable, cash in bank. I'm sorry. Additional information. Closing inventories are given. General factory expenses were unpaid, accrued. Insurance might be, we have to calculate prepaid insurance here. Okay, apportionment of rates and insurance between factory and office, and depreciation of factory machinery using reducing balance method. What we have to do, we have to make a manufacturing account. Okay. We have to make a manufacturing. Okay. So here we are. Okay. Okay. Now, machine operators, 43,300 is the direct labor cost. So we are going to report it over here. After direct material, we are going to report here direct labor. Direct labor. That is how much? That was 43,000. 43,300. 43,300. Okay. Getting my point clear? So direct material and direct labor. There are no direct expenses available. Okay. Rate and insurance, general factory, machinery, no. There is no direct expense. So it means direct material plus direct labor will provide us prime cost. So here we are with our prime cost, direct materials and direct labor. Prime cost 56,165 56,165 plus 43,300, 99,465. 99,465. This is the prime cost. Now our heading, production overheads. Okay. Now for production overheads, what we have to do, we have to take all indirect expenses of factory. What are indirect expenses of factory? C. Factory supervisor salary 25,000. Yes. Factory supervisors salary 25,000. Okay. Second, delivery and vehicle driver is in selling and distribution overhead, not part of manufacturing account. Okay. Next, rates and insurance 29,600. But we have to find out here any adjustment. Insurance had $8,000 had been paid for the year July to June 2024. So it means what we have to do here, insurance was paid on July. Okay, July 2023. Okay. Then we have August, September. Okay. 3 months. We are spending on 30th September. So it means we, out of that insurance of $8,000, we have consumed 3 months insurance in this accounting year, and the remaining 9 months will be included in the next accounting period. So out of 10,000, what we have to do, 8,000 multiply by 3 divided by 12. And we'll get the actual insurance expense 8,000 minus, multiply by 3 divided by 12. So it means out of that we have consumed only insurance of 2,000. Are you getting my point clear? Again, I am repeating. Out of insurance, 8,000 will be applicable for only 3 months of this year and 9 months of next year, because we are standing over here on September 2023. Getting my point clear? So what we have to do, because we are not given an exact amount of rates and insurance are given together. So what we do, 39,600 include that 8,000 for insurance. So what we do, we have two options, minus 8,000 plus 2,000. So that would give you 23,600 as rate and insurance amount, 23,600. And because rate and insurance are apportioned equally, so between office and factory, so half would be taken as rates and insurance for the factory. That would cost 11,800. Rates and insurance, and I'm writing it, that what the amount was actually $29,600 minus 6,000. Okay. Divided by 2, and we get here 11,800. Okay. Now, after rates and insurance, what else? General factory expenses 9,650. General factory expenses were unpaid 335. So what we do here, general factory expenses are given as 9,650 and 335 are unpaid. 9,650 plus 335. That makes it 9,985. General factory expenses. $9,985. Okay. Then we have, okay. Then we have the next item. Oh, the cost of factory machine and provision indicating for the depreciation. So we are done with all these three adjustments. This is done. This is also done. And this is left. This is left. Insurance, factory machine, reducing balance method is very easy. How to calculate? Okay. Cost minus provision. Okay. Multiply by 25%. 80,000 minus 35,000. 45,000 multiplied by 25%. 11,250 is the depreciation of factory machines this year. Okay. So what is depreciation? Factory machinery. Okay. This is 11,250. Okay. Now we'll get total production overhead. Yeah. 1, 2, 3, 4 items. 25,000 plus 11,800 plus 9,985 plus 11,250. 58,035. Okay. 58,035. Okay. If we add prime cost and production overhead, we get total manufacturing cost 99,465. 1,57,500 is total. 1,57,500 is TMC or total manufacturing cost. Okay. Now what we have to do? We have to add work in process inventory on 1st October 2022. That was how much? Yeah, 8,125. Eight, 125. What we have to do here? We have to less work in process inventory closing, that is on 30th September 2023. And this is how much? Here it is, 7,365. Keep it in a bracket, 7,365. So we remember that we have to deduct it. Okay. So what we get here is cost of production. COP or cost of production. How much? 1,57,500 plus 8,125 minus 7,365, and you get 158,260 cost of production. 158,260. This is your cost of production. Getting my point clear? Okay. And mashallah, we got 11 marks. Okay. Prepare the current asset section of Sara's statement of financial position at 30th September 2023. Okay. So, current assets. Okay. Current assets always starts with inventories. Okay. Inventories. First inventory is raw materials. Then work in process. Then finished goods. Okay. So raw materials ending inventory is how much? Here it is. 5110, 7365, 13,725. These three. Okay. Raw materials. That was 5,110. Okay. Work in process. 7,365. All closing inventories. And 13,275, 725 is the finished goods. Okay. Then what we report? So total inventories would be how much? 5,110 plus 7,365 plus 13,725. 26,200 is total inventories. 26,200. Okay, second item we need is trade receivables and provision for doubtful debts, if any. I don't think so. We have only trade receivable 27,000, cash at bank 1057. Okay. We have trade receivables. We have cash at prepaid insurance. We have cash at bank. We have cash at bank. Okay, trade receivable is how much? 27,000. Okay, prepaid insurance 6,000. And cash at bank 1050. Okay, that makes your total current assets here 60,250. 60,000 current assets. Total current assets. Okay, so that's state which accounting business are complying with not recording any value for this efficiency in her financial statement. That is, if we can't measure something in value, we don't include it in accounting cycle or accounting system, money measurement. Okay. So that's all for today. Inshallah, I'll come up with the next video soon. The other 3 questions of this year. So that's all for today. Thank you. Take care. Allah Hafiz.